Agnes Bestest here, guys. So today I'm gonna quickly show you the best explanation of MACD. So moving average, convergence, divergence, MACD, convergence, moving average, convergence, divergence. So what does it mean? Basically, convergence means that, for example, if you are on a swimming in a river, it has a flow, and you simply go, for example, in the same flow of the river, but in front of you, the river starts to move faster. And for example, there's a friend in front of you. So the distance between you and your friend is basically the divergence. And if he were swimming back like towards you, it will be convergence. So to distance. Okay, and here in a MACD situation, we have the same. So basically it's the distance between moving averages, and how they converge or they diverge. Here, by default, moving average, convergence, and divergence MACD is by default the first one, or the faster one is 12. So here we have it with blue color, and the slower one is 26. We have it in the red color. And the distance between them is what's called the MACD line. And here we have the MACD. I will show you the default setup. So the default is here as well, 12, 26. I'm going to show you, and the signal period is 9. I'm going to explain to you later the signal period, but now we have the same moving average 12 and moving average 26. So basically, the MACD line is the line, the green line is the MACD line, the faster line. And it's you get it by subtracting the moving average one from another. So in this case 12 from 26, and it's not like mathematically like you subtract 12 minus 26, which is minus 14. It doesn't work like this, because you want to subtract the size at the point. For example, let's take into account this candle, and now I need to go to TradingView to explain it better. So here at this point, the green line is MACD, DMA 12. This Turkish line is 26, and the MACD line, so the difference between these two lines is, in this case, let's say it's nice round number, let's say it's 60 or 61, 60. Okay, let's check it from here, from bottom to top. And what it means that the MACD line, which is the blue line here in the MACD indicator, the MACD line is 60 as well at this point, at this candle. Look at this candle, let's check it. So let me leave this here, and as you can see at this point, it was truly around 59. So as I showed you, the difference in this case it's Japanese yen, basically it's GBP JPY, so this is Japanese yen. So it's 0.059 Japanese yen, the distance. Okay, I hope it's clear now. And this blue line that I'm pointing to now, it's called the MACD line, and it's the distance between the moving averages, okay, at the given point. So now it's here's different, of course. And now what is the signal line? The signal line is this orange line, and it's the well, in this case, we have it set it to 9, so it's the moving average 9 of period 9 of this MACD line. Okay, so basically the average of 9 candles to the past, 9 candles to the past 9 bars of this distance, so of the MACD line. Let's get back to pocket option, and it's actually, I have the same chart here, so this is the green line. So what else? If here we have also, so now we understand those lines. The green line is the MACD line. Here the red line is the signal line. Here we also have the signal line, the period of 9, so of this distance, so of the MACD line. And now how we use it, or actually also let me explain the 0 point of the MACD indicator. So basically, when this MACD line crosses below or above the signal line, it's always happening on the 0 level. So basically, if it crosses below, we are going to the negative territory. So basically, below 0 point. And also, the histogram shows how much we go, how much we diverge. And if the MACD line crosses above the signal line, we are going to the positive area. Of course, when I'm talking about the distance between moving averages, and regarding to the histogram size, it's, I mean, the moving averages in the MACD area, not these ones, okay? Because here you can see the distance is great here, but the MACD line is actually just crossing, so the histogram is 0, like the size is 0. And here, of course, the size is big, so we always refer, the histogram is measuring the size of the distance between the MACD line and the signal line. Okay, so keep this in mind. And again, let me repeat, the MACD line, we were checking this candle, this green candle. So the MACD line is, here it's 0.059, and it's because at this point, because the distance between the blue line here, the moving average 12 and the moving average 26 is 0.059. That's why that's why the MACD line here is 59, and the signal line is moving average of period 9 of that MACD line. Okay, now how to use this? So the best way to use MACD indicator is going with the trend. So basically, and also you need to take into account where you actually have the crosses. So to make sure we are in a trend, or to make sure we know where the trend is, now let me draw another indicator here, because we need a 200 moving average. So we'll put on the chart another moving average, so that we can find out what's the trend. Let me put it to 200. The color will be, let's keep, okay, no, let's put it white. Okay, so this is the moving average 200, simple moving average. And these are, let me just remind you, these are exponential moving averages. Wait, no, oh, okay, guys, I need to change it to exponential, because MACD works with exponential moving average by default. So let me just quickly correct this small fail. EMA. Okay, now it's going back. Actually, this is actually great because you can see now how much it differs from simple moving average. Not much, okay? Here, this one is by default EMA. It doesn't even say, but this is EMA, okay? No problem. So let me quickly measure it. This candle, where was it? Okay, I believe it was this one. Wait. Yeah, it was this one. Here we have correctly EMA, but on this chart I had simple figure. Now it's EMA. So this is 412. And here we have nice, okay, well, 350. So this distance is around 60 on Japanese yen, okay? And actually, just if you are interested to know if they actually use cents, in the past, traditionally in the past they used a currency called sen to express 100th of a Japanese yen. Now, after the hyperinflation, those war times, they just don't use it anymore. So now they just use Japanese yen. And here we have 200 simple moving average, because why not? It just doesn't matter. Let me show you how it looks with exponential. Basically very similar. Let's put it simple. Okay, let's keep things simple. So how to use MACD? When we are in a trend, meaning we are above the simple moving average 200, and on MACD we are below the 0 point on the MACD chart, 0 level, and we are getting a cross. We are entering a long position buy. In this case, we were still below SMA, so we are not, even though it would be a good trade, profitable trade, we are still not really above it. But actually, you can say it's when it's like about to cross, it can be a valid signal, but it depends already on you. Let's see what it would be with exponential moving average. With exponential moving average, we would be even further. So let me put it back to simple moving average. That looks nicer. We are closer to being above, and that's almost having a valid trade. So here we don't have enough price action. Let me maybe put 1 minute and find some signal. So we need to have price above the moving average 200, and here we need to be having a cross below 0 on MACD. Is it here? Yes. Here we have a nice example. Crossing MACD line is the green MACD line is crossing the signal line. We are below 0, and the price actually is above 200 moving average. And as you can see, it would have been a very nice profitable signal. You would enter after the close of the candle. so that it just doesn't turn on us. So let's say you enter on this red candle. We are nicely already crossed. Stop loss below the lows, and you can just ride the whole. It will be like 1 to 10 risk to reward. Very nice. Let me find another example so that you see it's not just exception. So again, we need to be below on MACD, below the zero. We need to have a cross, and look, it actually crossed and went back. But still, even though it looks like fake out, because we would take this trade, we are here above, the price is above 200 moving average, so we would take this trade because we don't see the future so far here. So we would be like, okay, it closed, we will be on this candle, so we would be like, okay, cross, we go long, stop loss below this low, and let's see if we would be profitable. And of course, with stop losses in forex, always you need to have some space. So this will be a very close trade, but I think most people will be profitable if you have enough distance here. As I explained you in my previous video, the ATR is very useful for this average true range. So basically, you would have a stop loss. For example, you would take the low, and then just the stop loss would be the low level plus, or in this case, like minus ATR, so the average size, the average length of last 14 candles. Let's say 14 is like default. So the average length of 14 candles, so that you account for the volatility. Okay, so you just add it. So your stop loss would be like here. You add this ATR size, this, so like the average size of the candle of 14 last candles. So it would be like this. So your stop loss would be around here, and you would end up in a very nice profit, like 1 to what? 1 to, if you held 1 to 20, this is incredible profit potential. And let me just show you also one example for short trade for selling with MACD on this same chart, and we are very bullish. So let me see if we will get a bad signal, a losing signal. We did this when we are trying to go with short in this bullish trend. So here, wait, need to be below, with price below the moving average 200, and here nothing. Here almost, what is it? And so basically in the price action, I mean the MACD needs to be above. Okay, so where can we have this? Here, do we have a cross? And here we are below. So basically here we can say we are crossing here above zero, and we are also below the moving average 200. But of course, like, you can even take into account the angle of the moving average. You would maybe not take this trade just because of the angle is bullish. But let's say we take this trade, still the angle is not on our side. We are trying to go bearish, short. And you can see, even if you took this risky trade, you would end up in profit because your stop loss would be with ATR around here, and nice profit. The entry would be basically after the candle closes and it's confirmed cross, it would be around here. This size is 1, let's say, so it would be like 1 to 3 if you get out on this point. 1 to 3 risk to reward. So you risk, for example, 1,000 and you earn $3,000. Nice trade. So as you can see, this can be a very useful indicator if you trade it and with this way, like you take into account the trend. But I need to say this doesn't mean anything. You can still have a lot of losses by just following this indicator. You need to combine it with other knowledge, of course, and this is just a disclaimer. I'm not a financial advisor, all for educational purposes only. The other way how you can use MACD is by divergences. So I don't know, like doing, yes, basically here we have a MACD divergence. So with the price, this is the one pivot point of the price. The other one is lower, so we have a lower low. But on MACD, we didn't get a lower low. We got actually a higher low. Okay, so this is a bullish divergence, and as you can see, if you traded this bullish divergence, MACD divergence, you would end up in profit as well. You would enter around here, it's confirmed, and profit. And what else? I wanted to show you one more thing, what Investopedia says, how to basically this is the formula for MACD line. So as I told you, it's period, EMA period, the faster minus the slower. But as you already know, it's not like 12 minus 26, which would be minus 14. But we are talking about the distance of those at the point of the EMA, as I explained at the beginning. But what I wanted to show you is how they say we can measure the trend. What was it? ADX. They were talking about ADX. It's here. So the ADX is also a pretty useful indicator in this case, designed to indicate whether a trend is in place or not, with a reading above 25 indicating a trend is in place in either direction, and a reading below 20 suggesting no trend in place. Let me check if we have ADX on put option, and we do. ADX, so let me see if we can. So here we have a cross, and the default values are 1414. This is just a very quick ADX showcase. Let me check the good signal that we had. So in MACD, we are here below zeros, and on price we are above 200. So this is according to my strategy of trend with MACD. We should be taking a signal. Let's see what MACD says. And truly also MACD tells us we are above 25%. So it means we are in a trend, also according to ADX. But this was just a very quick usage of ADX. Let me know in the comments what you want to see next, a review of which indicator, or if you have any questions. And thanks for watching. Have a nice day.